The following special event is brought to you by Ash Brokerage, the practice enhancement company.
Welcome to Steve Savant's 4th annual tribute to Halloween entitled The Coroner. We'll perform autopsies on unplaced cases from the files of the declined, the postponed, and the heavily rated. Our expose on life insurance underwriting to usher in the substandard season. And throughout the week, we'll be giving away our underwriting guide of the top 10 commonly seen conditions. And on today's show, how knowing tobacco use and cessation guidelines can create sales opportunities. Part 5 of this week's series on Impaired Risk Underwriting. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Innsmark. Let's get down to business. Over half of all Americans who own life insurance are in the wrong rate class and overpaying for coverage. Now's the time to secure a second opinion. Today we're talking about smoking, and there's so many tobacco products. I want to break it down into a couple today and then another segment specifically for cigarettes. But I want to talk about cigars, and I want to talk about all the others like chew and snuff and pipe, and even Nicorette gum. It's interesting, when I came into the business, either you were a non-smoker or you were a smoker. There were no preferred classes for smokers. They didn't really micromanage tobacco use. If you were a pipe smoker, if you were a chew, you were treated just like a regular smoker. But over the years, we've seen some mortality changes and different arrangements when we look at actuarial science, and it's really shown that we can actually micromanage this a lot tighter than we did. So think about it, from the 1958 CSO to the 1980 CSO to the 2001, and even if you're looking at the VBT tables put out by the actuaries back in, I'm thinking 2008, that relative risk table, that shows expansion, and everybody's expanding in their ways that they approach tobacco products. Now, on one of these tobacco products, I want to talk about at least the first one, I want to talk about the cigars. Now, look at all the carriers that play in here, and they have very specific protocols and procedures, so that when you're looking at this chart, you want to look at this chart and say, okay, here are what they say. And remember, always check with the carrier before you go, because this changes all the time. I'm just using it for today. And this chart, you also want to check on the state availability for the product that you're always using. I'm looking at these carriers, and there's several carriers in here, and what they allow and how long do they allow it. For example, have you ever went to a party where they're just offering a cigar, and you have maybe once a month, or you go to a club once or twice a month, and you're just smoking a cigar twice a month? Well, they're going to say, like in one case, they'll say that's a standard non-tobacco. So you look at the carrier, the amount of cigars that they allow per month, per year, or even in some cases, as in one carrier, they have unlimited use for cigars. So it's really important to check it out. And then what underwriting class do they have, and the nicotine level in the lab that it has to have. And remember, a lot of these now must be negative. So even though you're smoking a cigar and they're willing to give you an underwriting that may be non-tobacco, the rating itself, remember, there can't be any of that cocaine spillage in your urine analysis. And also other conditions that may apply, and they all have their small, can't have any other tobacco products over the last 2 years, 12 months, 5 years. It just depends upon every carrier. What I like about this is it gives us an underwriting classification. Again, before I go to the chart, I always go to the actual standard platform and look at the standard price premium. I'll go to EBIX for that, look at the term and the GUL. It gets me in the game for pricing purposes. Once I do that, then I start matching up the pricing premium with these tobacco uses for cigar. Now, every one of these carriers has a different position. One of the ones of note is one carrier will actually give you preferred non-tobacco for cigars, and that price tag is so unbelievable, they almost own that category. So you always want to be thinking, who's the carrier that has a good standard premium? That's where I start, that's my starting gate, and then match up the protocols on the basis of cigar use. And then I want to also talk about a little bit about different tobacco uses, different tobacco products, whether it's through pipe, chew, Nicorette gum. Again, here's about a dozen carriers that actually approach this differently. Certain types on certain carriers are not allowed at all. They're just not going to play in this realm. They don't really treat it well. But then other ones allow this type of different tobacco product. You'll want to look through all the classifications to make sure you're getting the best deal you can. Remember, right now, pipes are probably the most benevolent, where chew and Nicorette gum, even Nicorette gum, depending upon how it's used, you want to be able to go through every carrier. Again, I start at the standard boilerplate first, look at the carrier pricing. Once I understand the carrier pricing, then I'm going to come to the chart and I'm going to work through which carriers are probably going to be more benevolent based on my client's tobacco use. Keep in mind that, again, you want to make sure that the product that you're selling is in the right state, as well as are they still using these protocols. This is updated frequently, so you want to be able to stay in touch. Remember, it's not a deal killer anymore. Cigars, chew, pipe, Nicorette gum, these are different forms of tobacco, and every carrier has a position, and you want to find out, match up their product with the best underwriting possible. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate their agent population as they once did. But now you can have a quick synopsis of the top 10 commonly seen conditions at your fingertips, so you can illustrate a reasonable rate class for your prospects. Just email me for your copy of the top 10 commonly seen conditions at steve.savant@ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, we're talking about tobacco use, and of course, this segment we're going to speak specifically to cigarette use. Now, in other previous, we've talked about pipe and chew and Nicorette gum and cigars, but really, smoking cessation is a big deal to carriers. I remember back in the day when I first got into the business, you were either a smoker or you're a non-smoker. And once you're a smoker, you are a smoker. And they just treated you that way. But now they want to know, how long have you smoked? How often did you smoke? And when did you quit? And depending upon when you quit and how much you smoked, you could really get differences in premium quotes. And I mean, how big is this and how broad is this? Let's look at the market, because it's really quite extensive now. So when you're looking at a chart like this, you're looking at about a dozen carriers again. They all seem to have different approaches. You'll notice that in this chart, again, we break it down by 1 year, 2 years, 3 years, and of course, 5 years. I'm looking at these basic charts. And again, you want to make sure that whatever product you're going to use, you can use it in your state, that it's available, and that the protocols haven't changed. Remember, they update this quite often. So I want to be able to look at the carriers, and I'm saying, well, what if I just quit a year ago? Well, it's only been a year, and hopefully you won't have a relapse into smoking. But most of these are going to be at standard plus non-tobacco. But there's a few carriers that'll actually give you preferred non-tobacco if every other area of your life is good enough to fit within their preferred category. And you'll look at certain carriers that actually will then give you a non-smoking rate. That non-smoking rate will depend upon other issues. You could be standard, you could be all the way up to the preferred, but that's 1 year. Now when you start to get 2 years out, you start to see differences appear. Everybody still seems to be about preferred non-tobacco, and some of them might be benevolent to sneak you into a little bit higher classification, but those first 2 years are the critical years. But when you get the third year, you're going to start seeing some differences again in underwriting, or again, remember, some of them say you have to still have a negative urine analysis for tobacco, so just keep that in mind as well. But by the time you get out to the 5 years, you're going to be in the preferred plus. Some of these will be into the preferred non-smoker. All these categories now start to get more benevolent. The price tag comes down, and a few of these, shockingly, do preferred best. When you're looking at one of the top ratings after smoking, they're saying, hey, after 5 years, we don't see that impacting the mortality like we used to be able to calculate. Now think about this also, our culture has changed. Cigarette smoking in the United States isn't anywhere near what it was back in the day when I was growing up. So things have changed, and all these kinds of new technologies, e-cigarettes and using cigars instead and things of that nature, have really impacted the whole smoking culture and the way we underwrite. One of the biggest issues you want to look at, though, when you look at this chart is you'll always want to start out on your standard platform on premium. You want to see what that number is, then match it up to these carriers and see who gives you the most benevolent underwriting. And keep in mind that if you have impairments, multiple impairments, that you're smoking, but you also have an impairment with this, you want to try to match up the best on this chart for smokers as well as the impairment. So it's always critical to look at charts and then cross-pollinate them. See how it really looks like when you look at your final analysis. You're taking the right carrier for the smoking, the right carrier for the impairment, the right carrier for your pricing. When you do this and you just do a little bit of homework, you can really be able to position your client to a better position. Now they're going to be asking then again, category 1 is 1 year, category 2 is 2 years, 3 years, and 5 years. So those are the areas that I'm looking at when I'm looking at smoking. How long did you smoke? When did you quit? And they're going to look at those numbers. And one little anomaly, there's also a carrier that actually extends non-smoking. Even if you're smoking today as a smoker, they will extend non-smoking to you. They'll give you 3 years to actually quit smoking. And if you do that, then they'll continue with their non-smoking or their non-smoking rating. They're giving you an opportunity, a way to kind of move away from it. They're giving you 3 years to quit smoking. To me, that's the most benevolent out there. And they'll come back in again in the 4th year and they'll go ahead and test you. To me, this is where we're changing. This is just one anomaly by one carrier that shows the impact of how we've changed things in smoking and smoking cessation. Remember, over half of Americans who own life insurance are in the wrong rate class and overpaying for coverage. Now is the time to secure a second opinion. Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? Just hop out to our video archives. And remember, you could be wiser as an educated advisor. I'm Steve Savant. We'll see you next week. Today was part 5 of our 5-part series on life insurance underwriting. To order your free copy of the top 10 commonly seen conditions, just go to downtobusiness.ashbrokerage.com. And remember, over half of all Americans who own life insurance are in the wrong rate class and are overpaying for coverage. Now's the time to secure a second opinion with the largest in-house underwriting staff in the brokerage community. And don't forget, you can follow me on Twitter, Facebook, or LinkedIn, or just email me at steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. Happy Halloween, everyone.